and welcome to Wonderla Holidays Limited Q2 and H1FY26 earnings conference call hosted by Ambit Capital. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, you may press star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Shamit Ashar from Ambit Capital. Thank you, and over to you, sir.
Yeah, good afternoon, everyone. On behalf of Ambit Capital, I would like to welcome you all to the second quarter and first half FY26 earnings conference call for Wonderla Holidays Limited. From the management, we have with us Mr. Arun Chitlapilli, the Managing Director, Mr. Shaji Lewis, CFO, and Mr. Dhiren Chaudhary, COO of the company. We would now like to begin the call with opening remarks from the management, post which we will have the forum open for an interactive Q&A session. Thank you, and over to you, Arun and Shaji.
Thank you. Good afternoon, everyone. This is Arun. On behalf of Wonderla Holidays, I would like to extend all of you a warm welcome to our Q2 and H1 FY26 earnings conference call. Joining me today is our CFO, Mr. Shaji Lewis, and our COO, Dhiren Chaudhary. I trust all of you had the opportunity to go through our results and accompanying investor presentation. This quarter marks a defining moment in Wonderla's journey. We have achieved our best ever Q2 performance, footfalls, and as well a sharp improvement in profitability at 24% in year-on-year growth in total income and a 8x jump in EBITDA. This highlights the resilience of our business model and the power of our brand. Our multiple footfall and branding campaigns, along with enhanced sales strategies with digital channels, are now driving almost half of our bookings. This reflects our success of our integrated digital strategy and the growing adoption of online channels by our guests. Isle by Wonderla, our new resort in Bangalore, continues to deepen guest engagement and broaden revenue base. The resort business has delivered best ever Q2 as well, with revenue upside of about 2 crores and EBITDA improvement of about 2%. On the non-ticketing front, we have sustained double-digit growth on our spend, driven by a mix of volume and value proposition. Our fifth park in Chennai is progressing rapidly towards completion, and we expect to commence the commercial operations from next month, December 2025. Looking ahead, we remain focused on innovation, guest experience, and disciplined capital allocation. With a strong brand, diversified portfolio, and a robust balance sheet, we are confident of sustaining growth and delivering long-term value to our investors. With that, now I hand over to Shaji, our CFO, for detailed analysis of financial performance. Over to you, Shaji.
Thank you, Arun. Good afternoon, everyone. So let me take you through the financial highlights for Q2 and H1 FY26. Our revenue from operations for Q2 FY25 stood at 80.15 crore as compared to 67.38 crore, reflecting a growth of about 19% YOY basis. EBITDA for the quarter stood at 74.84 crores, up by 8x on YOY basis. The EBITDA margin for the quarter stood at 9.9% approximately. And during the quarter, our reported PAT is negative 1.75 crore, which is improved by 7.62 crore on YOY basis, without considering the exceptional items. Moving on to the half-year performance, our revenue from operation for H1 FY26 stood at 248.4 crore as compared to rupees 240.3 crore, reflecting a growth of about 3% on YOY basis. The EBITDA for the period stood at 884.16 crore, and then profit after tax for the period stood at 50.8 crore. Now let me take you through the park-wise footfall. In Q2 FY26, our Bangalore park received a footfall of 1.96 lakh, Kochi park 1.92 lakh, Hyderabad about 93,000, and Bhubaneswar 24,000. In H1 FY26, Bangalore recorded a footfall of 5.19 lakhs, Kochi 4.28 lakhs, Hyderabad 3.55 lakhs, and Bhubaneswar with 1.20 lakhs. With this, I conclude my speech and open the floor forum for Q&A session. Thank you.
Thank you very much. Ladies and gentlemen, we will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harsh Gupta from Ionic Wealth. Please go ahead.
Arun and team, congratulations on a very good set of numbers. I had a couple of questions. First is, I believe Wonderla has been making some of the rides or designing some of the rides, around a third of the rides on their own. Could you please explain the process of how you're benefiting from these economy-driven indigenization? Do you design and then send the rides to be made by a contractor or a subcontractor, and the other 2/3 of the rides are you just buying second-hand from Europe or East Asia? How do we benefit from being a multiple park chain in terms of designing and manufacturing our parks to reduce costs while remaining safe? So that's my first question.
This is something that we've been doing ever since the company was incorporated into way back in the 90s. The reason why we make a lot of our own rides is it's prohibitively expensive to buy everything from outside. And as you know, India's amusement park industry is in a nascent stage, so there are not too many manufacturers who manufacture rides for us. So consequently, we have built the capability to design, build, and operate and maintain a lot of the rides. So when we do that, I think the cost benefit is huge. So like we can build rides for a fraction of the price of what a foreign company would charge. Like we have, for example, the Ferris wheel that we built, it costs us few crores, like maybe 3-4 crores, but the same ride, if I had to import from Germany, it costs like maybe 3 times or 4 times as much. So that is the rough calculation. So importing will be about 4 times as expensive. And also the other advantage of that doing that is the other advantage for us is safety, because we are able to quickly repair if there is any issue, because we have designed and built the ride ourselves. It's easier for us to repair it. We use Indian parts. In fact, we use our own parts for a lot of the rides. So these are some of the advantages.
And that makes a lot of sense. But where is the unit? Where is the factory unit where we manufacture some of these rides ourselves?
We are in Cochin, we are in Hyderabad, we are in Bangalore.
Okay, so it happens in situ in all of the 3 parks. It
Yes.
on the
all
location.
our big parks we have the limit. Yeah.
Okay. The second question is, after Bhubaneswar and Chennai, there has been no announcement on any future parks so far. In Bhubaneswar, I believe we got a very multi-decade lease for around 6 crore rupees. Is the plan still to park whenever announcement?
So I think we are looking at we are looking at various cities. We have offers from various state governments. It's just that we are kind of relooking at some of those offers, because we feel financially, if it's not viable, we will not proceed with some of those. But we are still exploring, and we will definitely update you when there is an update, when there's a concrete date on when we can start our next project. We are in discussions with various state governments, and we will definitely announce something soon. But we are right now we are busy. Right now we are busy with in Chennai. So once that is done, I think by that time we will be able to announce something.
Perfect. And my very last question is, we obviously in a QIP in December last year, and the management, you have guided that we'll use a mix of debt, equity, and internal accruals for future parks, and we'll roughly have two parks every 3 years or so. I'm just back of hand calculation of park like Bhubaneswar.
Might get slightly delayed because these are long gestation projects. We may not be able to do 2 parks all the time. Like I said, theoretically we can do 2 parks simultaneously. That's what I said. But depends on the land acquisition and government approval. So those things can get delayed. Like for example, in Bhubaneswar, everything happened within few months, whereas in Chennai it has taken years. So it just depends on every state. We are a business which is dependent on a lot of government approval. So some of those, will factor into some of the timeline.
Oh, okay. Thank you.
Thank you very much. Next question is from Mr. Angad from Samiksha Capital. Please go ahead.
Thank you for the opportunity and for the good set of numbers. Sir, my first question is regarding, I just want to understand from a strategic perspective that if I look at the footfalls till FY24 where we reported the maximum footfalls. Last year we saw degrowth and now we are again catching up to FY24 numbers. But on the other hand, we are seeing that ARPU has seen a drastic growth since the last 2 years. Primarily driven by both ATP, but primarily driven by the non-ticket prices growth. Just want to understand, is our strategy going forward to premiumize our mature park offerings as there seems to be limited scope for footfall growth? Is my understanding right? And use the new parks to, drive the footfall growth and keep the ticket prices low, as we can see in the Bhubaneswar park ticket prices have seen like a degrowth.
Every geography will have its own differentiated pricing. So Bhubaneswar is a new park and it's in a tier 2 city, so obviously the pricing will be different. But our long-term objective is to premiumize the offering. I will give the mic to Viren to explain further.
Yeah. Hi, good afternoon. So I think we understand that there is an opportunity in terms of adding a lot more value to the overall experience of a park in terms of premiumizing F&B, in terms of giving many other products that we've been getting feedback from customers that will enhance their experience. And all of this is an outcome of the ARPU growth. And we feel that if we continue to build on this experience, we will be able to continuously build our ARPU. And simultaneously also look at opportunities, especially in the leaner season, which is Q2, and how we can turn around to bring in some footfall as we have capacity in our parks. And some of our strategies that we've implemented in Q2 has paid some heed. So it's good learning, and we hope to continue to improvise on this.
Okay, thank you. My second question is to Saji sir. With our Chennai park opening next month, how do you see the upfront cost from the Chennai park in trickling in our P&L from employee advertising, etc., and other costs?
No, mostly the cost structure will be similar to the other parks what we already are having. Only thing is that for the launch purpose, we may be spending some additional amount for creating the initial buzz and all. But otherwise, it should be almost equal to the structuring will be same.
Got it. And one clarification, are we break-even on at the Bhubaneswar park on EBITDA and PAT level?
Yeah, EBITDA level is mostly we have to match the revenue. It's only some 11 lakh or something dip is there in the EBITDA. Otherwise, it's almost matched.
Got it. Thank you, sir. I'll get back in the queue.
Thank you very much. Participants, if you wish to ask a question, you may press star and 1. Next question is from Prolin Nandu from Edelweiss Public Alternatives. Please go ahead.
Hi. Thank you, team, for taking my question. Slightly similar question on the footfall, right? Now, if I look at your numbers, park-to-park basis, right, maybe half yearly or even quarterly, we haven't surpassed...
Can't hear you clearly.
Hello? Is it better now?
Yeah.
Yeah, no, so I was saying, my question is around footfall, and if I look at, 4 years trends, right, for each and every park, our footfalls are, trending a bit lower, right? So how should one think about this 23-24, FY23 as well as FY24 as a year, right? Should we just think about it as an anomaly and there was a pent-up demand of post-COVID?
Yes. That is how it runs. I've explained this before in earlier calls also. 23 was post-COVID, we had that extremely high footfall. Then I think it kind of stabilized for the next couple of years, and now again we are seeing some growth. So I mean, this is expected. This is how it should work.
So then so what I am trying to understand is that, probably expecting that we will surpass that numbers anytime soon is probably not a right metric, right? We should probably think about the reset which happened.
It keeps improving. Every year I think you can expect some improvement. I mean, it will not, usually doesn't happen in a clockwork fashion. It will be, you will see spikes and then you will see drops. So, sometimes you will see when we launch a new couple of rides or do some marketing, you will see a huge spike, and then, sometimes maybe a couple of other, next year you might not see that spike, you might see a slight dip. So it's just the way the business works.
Right.
But if you look at over a long period of time, you will see growth. Yes.
Okay. Because see, FY25, Arun, was also a slightly muted year for us, right? There were lots of disruption related to election, related to weather.
Yeah.
So on top of that, we have added some, we have done some digital initiative as well, added some new rides as well. And despite that, if we look at the footfall for half-yearly basis, it's still negative. So I'm just trying to understand whether our understanding of what...
We keep improving over a period of time. Now, exactly how it will happen, we can't predict the future, right? But definitely over a period of time, it will improve, and that's what we are seeing even for this quarter.
Okay. Just one last point before I probably move to other topics. See, we had a equation in mind, right? That part of the growth will come from footfalls and part of it will come from ARPU. What we are at least witnessing in last couple of years is that there is a stronger growth on ARPU versus a footfall, right? But is it just again something which is a temporary kind of a thing, and we should again revert back to our expectation of how the growth should come from contribution from volumes?
We keep changing. So we are focusing more on ARPU growth now, because if footfalls are being impacted, then obviously our efforts will be to maximize ARPU. Whereas if footfalls are coming in more, then obviously sometimes ARPU may get affected. So it's a cyclical thing. Sometimes you will see both. For example, in Q3 you will see ARPU may come down a little bit and footfalls will grow. Whereas in for example, in Q1, where now parks are already running full, the chance of getting footfall growth there is maybe limited, because their parks are already full, there is a finite capacity. So then ARPU growth makes more sense. So it will be a mix and match of both.
Understood. One last point on this, expansion plan beyond Chennai, right? So now, when last couple of quarters back, when we had raised money, we thought that, we are in advanced discussion with some of these governments, right? Where is the delay, right?
There will be some delays, because it's a government thing. So they usually take, their own sweet time sometimes to do. The land is involved. So, it's easy. It's not easy for us to conclude that land deal quickly. So sometimes there will be delays. Sometimes we also will reassess some of the locations, and then we want to move to a different location. So all those considerations, will happen. We will definitely keep you updated where next location will be. We are definitely looking at tier 1 and tier 2 cities as well. But we will give you a concrete, whenever there is some signing or something concrete happens, we'll keep you updated.
Thank you so much. All the very best.
Thank you.
Thank you. Next question is from Naveen from iThought PMS. Please go ahead.
Hi, team. Congratulations on a good set of numbers. Hope you guys can hear me.
Yes. Yeah.
Yeah. So, just wanted to ask a couple of quick questions. So the first one is, I completely understand that the approval for new parks or announcement for new parks, so that might be a little lumpy. but I remember a few quarters back, we set a vision to be like India as a 10-12 park country. Is there any change in that number, or do you have a different number?
No. The strategy is to go to all the tier 1 and some of the tier 2 cities, so I don't see any change in our strategy. Some delays here and there can happen. Like I said, these are long gestation projects. It's not easy to find land. We need large tracts of land, so it's difficult to find and expensive. So we need to find that right balance. So whenever we will definitely we are constantly on the lookout for new projects. So we'll keep you updated when there is some movement on that front. It will happen soon, but we will keep you updated.
Got it. The second one would be, so I read about the fact that we've started doing this entire QR journey from beginning to end, for food as well as the ticketing. So that started this thing, or the launch of the...
Yeah, that is a part of our digital transformation journey. So we have just launched one part of it, but there's a lot more to be done. I think the whole exercise will take us a couple of years. We are expecting to see a revenue upside because of this as well, and a better customer experience, and also more control for us to, in terms of handling quicker turnarounds, and also giving more options to guests in terms of self-booking or reducing queue times, all these kind of things.
Got it. Just wanted to ask that. If I can squeeze in one more small question regarding the Chennai Park.
You already asked two questions, so you have to go back on queue, please.
Yeah, sure. Yeah. Thanks.
Thank you.
Next
question is from Nilesh Doshi from 3 Asset Management. Please go ahead.
Hello. Am I audible?
Yes.
Thank you for the opportunity. Yeah. Sir, the first time I'm attending the Concall of the Wonderla, so my question may be the noise. So, see, I understand that the amusement park business is largely depend upon the footfall, the number of the visitors that visits the amusement park. In Q2, the company has reported that 12% volume growth. But if we look into the last 3 years Q2 data, then there is no growth, because suppose we exclude the Bhubaneswar park, then there is absolutely no growth. In Q2 24, already we have reported the 4.96 lakh visitors, and this year it is 4.81 lakhs if we exclude the Bhubaneswar park. So why the company is not attracting the higher number of the visitors to our park? Is it because is it the characteristics of the amusement park business, or we have a
characteristic of the business? It is a characteristic of the business, and Q2 is a weaker quarter usually. So because of that, I think footfalls do fluctuate from time to time, and Q2 is unusually heavy with rain and all that. So because of that, visitor numbers, that is why Q2 is the lowest quarter for us.
No, I'm not asking about the number per particular quarter, because I'm comparing the Q2 with the Q2 of the previous year. See, I'm comparing the Q2 24 data with the Q2 26 data. The Q2 24 has reported 4.96 lakhs visitors, and in current year it is 4.81 lakhs. Still, if we compare the YOY Q2 25, there is a 12% volume growth. But if we compare with the Q2 24, there is no volume growth. It is the volume.
I just told you that 23, 24 was our post-COVID year, so there was a huge growth in footfall. Then after that, 1 year the growth has come down, and now it's again growing. So that's how it works.
So for attracting the footfall, we have to set up the new park at somewhere in the geographically new destination.
Yeah.
And this is the only way, because if we maintain the such numbers constantly, and we are not say in other business there was always the same store sales growth. Here can we attract the more number or the repeated visitors, or the higher number of the footfall, because the how much ARPU we can increase? Because it is ultimately the number of visitors will increase our business. Is there any possibility we can attract the more number of people, the same repeated customer or same repeated business?
Difficult to do it in a Q2 because Q2 is we are a seasonal business, so it's very difficult to get footfall sometimes in Q2. Sometimes it's possible. That's why you're seeing, like for example, this quarter we have done well, whereas the same quarter last year we didn't do well because we had extra heavy rains and we had floods and all that. So all those things will affect our footfall. So that's how it works. You have another question?
Okay, that's okay. That is all from my side.
Okay.
Thank you very much, sir. Participants, you may press star and 1 to ask a question. Next question is from Vivek Kumar from Best Pals Research and Advisories. Please go ahead.
Sir, am I audible?
Yes.
Yes.
Continue.
Thank you. Thanks for the opportunity. So my first question is regarding what kind of parks do you prefer? Is it going to be Chennai kind of park, or is it going to be Bhubaneswar, or is it going to be asset light? I'm talking about the size, not about just about the way you go ahead about doing it. So the new parks, what do you prefer? Where do you think?
We want to do large format parks. We will only do large format parks mostly. That's what what our brand stands for, and all our parks are pretty big. Whether it's Bhubaneswar or Chennai or Cochin or Bangalore, they're all kind of similar in size.
Yes.
They all can handle large number of visitors, so that's our strategy.
So second question is, if I go to 3 to 4 years, can we assume other 2 parks apart from Chennai, or you don't want to even give 2 parks?
Yeah. No, we want 2 more. We'll definitely be adding a couple more locations at least. Maybe even more than that. We will keep you updated.
Sir, just a follow-up question on this only, nothing new. So what are, like, you are very sure because you're very sure about the locations, and because there are not many locations in India where you can put up large parks. There may be another 5, 6 cities. So do we have that urgency, or you don't think anybody is going to put up, so we have our time? I don't know how to. Am I making sense?
This is not like I said, these are large gestation projects, not only in India, all over the world. I mean, it takes years to build parks. In fact, Wonderla builds parks the fastest among any amusement park operator. I think anywhere in the world, we are able to build a park in 2 years, 3 years, so which is very, very small. So we'll definitely look at larger cities first, like tier 1, like Bombay, Delhi, Ahmedabad. These are the cities that we'll be looking at. We will also be looking at tier 2 cities, but that depends on the government if they are giving us a sweet deal for the land, or like how we did in Bhubaneswar. So it depends on the final deal that we are able to do with the government.
So my question was, sir, there are only maximum another 5 cities, at least if I take a 10-year horizon, maximum another 5 cities where we can post.
There are at least 15 cities where we can do this, because any city which has more than 2 million population, we can do it.
I'm talking about large park. You can put up large park in next another 15 locations?
Maybe 5 to large cities, tier 1 cities, maybe we'll have 4, 5 more cities, and then tier 2 cities we'll have another 10 cities.
That was my question, sir. Is there any urgency so that we can go ahead and put up there faster than, or here we don't bother because we can do it at our own pace because of lack of other players? What do you say about it?
This is not a very easy business to master, so I don't think it's not something that I don't think we need to be in too much of a hurry, because it's also a very capital intensive business. We will do it whenever we feel that there is a good opportunity for us to enter a market.
Okay. Thank you very much, sir.
Thank you. Next question is from Harsh Gupta from Ionic Wealth. Please go ahead.
Hi, Arun. My question was, let's just think about the Chennai Park for a second. If the Chennai Park was hypothetically done on a leased land, then just I want to understand, instead of 600 crores, how much money would we have spent? So basically, what's the rough breakdown of land versus rides?
We would have saved maybe 100 crores.
Okay, so we might have saved, even then the 600 would have been like 400, 500 crores at least.
Yeah, because like I said, these are large gestation, large capex projects. So land is maybe 1/4 the cost of total, maybe 1/4 or 1/5 of the cost of the land, the project.
So land is around 1/4 to 1/5 of the cost of a normal large project.
Yeah.
Got it. Thank you.
For example, in Bhubaneswar, we have not spent on the land. The land was given to us on a long lease by the government. So we didn't spend that, 50 to 100
Bhubaneswar,
crores.
we spent about 6 crore rupees on the land, right, for the 80-90-year lease.
That's it. Yeah, that's it.
And
which is very less.
So therefore, which basically means that the Bhubaneswar size is roughly half of Chennai on the ex-land basis. Roughly half.
Yes. Yeah, little less than half. Yeah, if you look at the thing. Yeah.
Okay. Thank you, Arun. Thank you.
Mm-hmm.
Thank you very much. Next question is from Vinay from Hathaway Investments. Please go ahead.
Yeah, thank you very much. I have just two questions. One is on when I see Bhubaneswar, you seem to have dropped the average ticket price, and with the same footfalls, you have got a higher non-ticket price. Was that a conscious call to take to attract more visitors?
Yes. Bhubaneswar is a new park, and it's a market where we have to create the category because amusement parks don't exist there before Wonderla went there. So I think there is, we have to give, sweeter deals in terms of ticket pricing. But what we are seeing there is people are willing to spend more on food and merchandise. So we are getting healthy non-ticket revenues from there. So that's what we are seeing.
But non-ticket revenues across your parks are more or less constant in around 500 to 550 bracket. 450 to 500 bracket.
Correct.
So it doesn't matter whether it is a tier 1 or a tier 2 city, is it? For non-food revenue? Non-ticket
Yes,
revenue?
I think people are willing to spend. So we are a special one-day outing. We are not we are not a high-frequency visit. So people do tend to spend more when they come to an amusement park. At least that is our
no, I'm saying between tier 2 and tier 1 also there is no. So you are offering.
There will be difference. There will be difference between tier 1. No, there will be some difference between tier 1 and tier 2. Mostly ticket price will definitely be higher. But food, I think there's not that much difference. We are seeing, we expected Bhubaneswar to have lower spend, but what we are seeing is people are willing to spend there also. But it's also a function of an early adopter kind of population who are coming to us. We are still a new park there. It's only been a year since we opened. So this is how it is. People do tend to spend more, especially in the early adopters tend to spend a bit more.
Yeah, secondly, on this period of this Q2, there have been rains across the country and they have created a havoc everywhere else. But somehow your footfalls have increased in spite of rains. Is there anything that you had done to encourage people to come during rains also, or was it just a...
Yeah, I'll just let Dhiren explain.
Yeah. Well, I think we've looked at some innovative digital marketing interventions and some great learnings from that has yielded outcome. So we continue to double down on this in the future. That's about it.
Okay. And in terms of occupancy of your Bangalore resort, that has really impressively gone up to 60% now. Anything specific there? Is it attracting foreigners? How exactly are you pitching that park?
Well, we just in June launched an extension of our resort, the new property Isle by Wonderla. And I think that's helped us premiumize our overall resort business, and that's been well received in the market, and we've got an overwhelming response. And I think the outcome of that is overall occupancy of the resort inclusive of Isle has increased.
Would you start Chennai with the resort or no?
No, currently we will only start with the park. As we start building our cruise, we will consider it in the future.
Okay. Thank you very much. Thanks a lot.
Participants, if you wish to ask a question, you may press star and 1. Next question is from Abhishek from ICICI. Please go ahead.
Thank you for taking my question and congrats on a good set of results. So I just wanted to know that, what has been the early trends, going into Q3 now? We have had Diwali in October. How have been the footfalls, and And you know how the government has given some, benefit to the customers through GST reforms. So are you seeing anything incremental flowing through to you? The spends have been increasing towards these, your parks or something like that?
So, the amusement park business has not got any GST rebate. We continue to be on similar GST. So, hence, that impact would not be seen in our park.
No, sir, not that. I was just trying to understand that, with this benefit, there would be some, some disposable income that will be left in the hands of the consumers. Are you witnessing any incremental spends going, post-September coming into October? And how has been the demand trends in, early Q3?
Well, it's been mixed. We'll have to wait for the entire quarter to get over because we also have the Christmas season. That is a much bigger duration versus a Diwali, which is just the 3 days. So we will have to wait for the quarter.
Okay.
Thank you. Next question is from Athar Syed from Smart Sync Services. Please go ahead.
Hello. Hi. Sir, I have a couple of questions. My first question is, can you please tell us your segment-wise revenue? Can you please give your revenue breakup, from how much your revenue you get from parks and how much from food and other things?
So we have two segments, ticket and non-ticket. It's a 70-30 split, 30% is non-ticket.
Okay. And sir, what is the reason there is a decrease in our bank balance and there is some very much increase in our cash and cash equivalent? So what is the reason behind this, a decrease in bank balance and increase in cash and cash equivalent?
That may be a mix of reasons. One could be we need to arrange the cash and cash equivalents and then fixed deposit, which is having a tenure more than 3 months. We need to group it in a different heads. So each of the quarter, the mix will get changed. Because of that, some up and down it will be there in our cash and bank balance. Some of them will go to the cash and equivalents. Other one will go to the current assets. The other way, there is not much of a change in our cash and cash balance. All our cash, what we generate from the operations is getting properly reflecting in our cash balance for the quarter and even for the half year.
Okay. And sir, why there is approx no growth or degrowth in Hyderabad Park? I saw in our PPT, there is almost no growth in Hyderabad Park. So can you please elaborate that?
Yeah, unfortunately, this year, especially mid-August to September and in fact all the way to October, there has been a lot of rains versus last year. In fact, you would have also heard of the cyclonic effects in the Andhra Pradesh belt that impacts Hyderabad. That led to some degrowth in footfall.
Okay, sir. Okay. Thank you so much.
Thank you very much. Next question is from Harsh Kumar from MIV Investments Management. Please go ahead.
Yeah, hi. I have a couple of questions. So is it safe to assume that your Chennai park would have peak footfalls of the other parks as well, so around 10 lakhs annually?
Yes, not immediately, but first year we are not expecting 10 lakh visitors. We will start with, we don't even know what it's going to be. We are hoping that it will, we can accommodate 10 to 12 lakh visitors there also.
And internally, how would you be expecting the ramp up to happen? Would it take maybe 3-4 years till you reach that peak level?
3-4 years is what we feel, yeah.
That's what we saw when we launched Hyderabad Park. So we are hoping it would take similar amount of time.
Okay. And could you talk a little bit about how the Chennai park would be different to your other parks in terms of, the rides that are there or F&B outlets that you're looking for? Would you be expecting your ticket and non-ticket prices to be materially higher versus other parks when obviously...
It will be at par with our other parks because it's also classified as a big park, so it will be priced
similar to a Cochin or a Hyderabad, but eventually it could be a slightly more premium park, but it's too early to say how the pricing will be. We might also have to do some discounting in the first initial years to create, more footfall. But we don't know. I mean, pricing at the beginning it will be priced at par with other parks, the larger one.
Mr. Abhishek?
Yeah. So just one more question. I think your maintenance capex was around, I think, 10 crore per park. I think it was mentioned in previous earnings call. So I just want to understand, with no other major capex coming up in the upcoming years. So how much of this is going to increase with the Chennai park coming in? Maybe some indication.
10% of our top line will be spent for maintenance basically capex in our existing park.
Sorry, sir, I couldn't hear you.
10% of our top line will be used for capex.
Okay, 10% of the top line. This will be for maintenance capex, right?
Yes.
Oh, okay, thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. Next question is from Sneha from SKS Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I just wanted to know what would be your medium to long-term growth targets internally, given the new parks that are opening up.
So I think each park, we are expecting the new park to add substantially to the revenues, because it's a new park and it's a large market as well. I will give the phone to Saji.
So the new parks, generally we expect the footfall growth to generally happens from the new parks, maybe once it settles in 3 to 4 years down the line. And then minimal growth from the mature park. So when I say mature park, our Kochi and Bangalore, about some single-digit growth in our footfalls, and then overall about some 8 to 10% of growth in our overall revenue. That's what we generally expect.
Yeah, that's it from my side. Thank you so much.
Thank you very much. Next question is from Rudy Vora from SAS Capital. Please go ahead.
Hello. Am I audible?
Yes.
Yes, ma'am.
Yes. So I have a question that can you give me an update on the new large roller coaster ride which was being added in the Bangalore park, which was around 20 crore capex, and when is the expected commissioning date?
So there is a new roller coaster that we have imported from the US. It's going to be installed in Bangalore. It will take another 6 to 8 months. So next financial year we will launch it in Bangalore.
Okay. And I also for Hyderabad continues to show a subdued growth, which was -3% revenue in H1. And are you seeing
that is because of adverse weather conditions. So we are expecting that to improve in this coming quarter.
Okay, you're seeing it. And are you going to see any structural demand weakness in the market, or this was just temporary for H1 only?
It is because of weather conditions. So cyclones, there were 2 cyclones that were hitting Hyderabad and that the whole Andhra area. So because of that, I think we've seen a lot of warnings. So people have not traveled. So if you see most of this kind of entertainment where people have to go out and travel would have come down, and we are also got affected in the same way. That's it.
Okay. And the last question is that you had earlier guided for 3 lakhs annual footfalls in FY26. So are you on track to achieve that?
Where is it? Sorry, 3 lakhs...
footfall annual.
Yeah, I think we should be able to, more or less we'll get there.
We'll get there. Okay. Thank you, and all the best for the future.
Thank you.
Thank you. Next question is from Vivek Kumar from Best Pals Research and Advisories. Please go ahead.
Am I audible, sir?
Yes, please go ahead.
So this is slightly long-term question. I don't know if I can use the word challenge, but the challenge for any amusement park is to get a repeat, because if I come once, I may not be coming every year apart from small percentage of customers. So how do you, what do you do internally and what factors externally in the economy do you think will help your footfalls grow in the long run? Like Bengaluru today is 1.2, it is around that. Do you see Bengaluru going from there over a 10 year, or no, you still think even after 10 years Bengaluru will be 1.1, 1.2, or what are the factors?
I think eventually it will grow, but it also is a function of adding attractions and having capacity to handle footfall. So right now, with our current capacity, we can handle about 12 lakh, 13 lakh visitors. We are hitting about 10, 11, 12 like that. So I think there is not too much room to grow. So like 12 lakhs cannot become 25 lakhs. So that we don't have the space for that. So that will happen only gradually as we add new attractions to the park. But eventually, yes, we want to be able to accommodate more visitors in our park.
So that's my question. So what do you think internally you will do, and what factors you will look externally that, okay, we have to now expand our park, add new rides, make it bigger, provide what factors externally are you looking? Is it like per cap, like you want incomes, or so what will give you indication that we have to start going ahead and adding more parks and expanding our parks?
So now, for example, Bangalore, we are already adding new rides because we know that it's already running full. So, I mean, whenever we feel that there is enough, there's too much of a capacity constraint in a particular location, we will keep adding new restaurants, new rides, new roller coasters, all these kind of things. So that's a continuous process.
Okay. Thank you, sir. Thank you very much.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. We have a follow-up question from Harsh Gupta from Ionic Wealth. Please go ahead.
Hi, thank you again, Arun. I wanted to understand, I read earlier that your mature parks, which is Kochi, Hyderabad and Bangalore now, have roughly or almost half of their land currently underutilized or unused for the theme park purposes. Is that ratio, first of all, broadly correct?
Yeah, we have roughly about 40%, not 50. About 30 to 40% of land available in Kochi and Bangalore. Hyderabad, we don't have that much land. We probably have like 15-20% land available.
Okay.
Bhubaneswar also we have at least,
So maybe roughly 1/3 of the land is available in your mature parks, not 40-50%, including Hyderabad. So my question is, are we planning to expand into these pieces of land over the next 5-7 years? Because that is also in a way going to increase your top line and overall revenue.
Yes. We are already doing it. We are slowly, like for example, Bangalore, we have used 4 acres for the new resort. Then we will use another 4 acres for the new roller coaster. So every time we add a big ride or a big attraction or like a resort or restaurant, the area will get consumed.
Just to get a sense, like the Bangalore park or the Hyderabad park, let's say 50-60 acres each, what would be the current market value of the land? I know it's not available.
Roughly 3 to 5 crores per acre.
Okay, so roughly 4
5, 6
crores.
Yeah, maybe Hyderabad will be like 6 crores per acre kind of. Yeah, that's it.
Also Hyderabad maybe 5-6 crores and Bangalore, Kochi 3-4 crores per acre.
Yeah, that's everything is around, I would say 5 crores per acre is average you can take.
Yeah, okay. So and our
some are a little more, some are a little less.
Yeah, of course, it's an average number. And our overall number of acres we have across the 3 parks, ignoring Chennai and Bhubaneswar, is roughly 150 acres, 140 acres, 150 acres.
No, I think much more than that. I think we have maybe 250 to 300 acres of land. 300 acres of land.
And okay, so the land value at market value today is around 1,500.
I have not really looked, but yeah, you could say that.
Okay, thank you so much, Arun. I'll go back to the queue. Thank you.
Thank you. We have another follow-up from Vinay from Hathaway Investments. Please go ahead.
Yeah, just wanted to check out, you have a customer loyalty program for your customers, regular customers?
We have special offers that we keep doing for, and also we have email-based offers that we send. We don't have a loyalty program as yet. We are currently undergoing a digital transformation. Once that is done, we will launch a new loyalty program. We used to have another one before, but I think post-COVID we have not relaunched it because we need to change our entire system, which we are doing now. Once that is done, we will launch a new system, loyalty program.
And what kind of average customer age profile do you get in your parks?
Our average customer age, I think, varies between 13 to like 24. So that we are a young customers that we get mostly. We do get slightly like from 24 to say 35 also we get, but a smaller percentage.
Okay. So basically, it will be college and young professionals.
Schools, colleges, families, and then we do get like corporate also. So but that's a smaller number.
Okay, sure. Thank you very much.
Thank you. As there are no further questions, I would like to hand over the conference to management for closing comments.
Thank you all for joining Wonderla Holidays Q2FY26 quarter results. We are excited to launch our fifth park in Chennai in this ongoing quarter, and we hope to see you at the next conference call as well. Good day and all the best.
On behalf of Ambit Capital, that concludes this conference. Thank you for joining us. You may now disconnect your lines.